Hello, everybody. This is Osprey from MyChartCoach.com, and now we're gonna take a look here at the futures. So yeah, this is Sunday here, and we've got pretty flat right now. After the drop on Friday, we've got things calming down a little bit here in futures trading. The Nasdaq, the S&P 500, the Dow Jones, they're all trying to find support here right now in early futures trading. We've got VIX is up again, VIX futures slightly up, and yeah, so we're gonna see how this all plays out. We've got Bitcoin here after the pullback. This is the Bitstamp chart for Bitcoin, the daily chart. You can see it pulled back here and it bounced off of this EMA4 support zone. That's the pink line. That's the big level to hold. It's currently at 81.80. As long as candles keep forming above that level, the chart is super strong and the signal is to keep riding. It's forming this flag type pattern here off of this big green candle. The key is going to be breaking the closing price here on the 24th. That's the high close horizontal resistance level at 8,400, and then just above that we've got the 200-day simple moving average coming down fast. It's the red line right here, currently at 84.97, and so you got 84, 8,500. Those are the two levels to break above. If it stalls out at those levels, this is where it could possibly consolidate. A break above 8,500 would be really bullish, and I would be looking for a run up to 9,000 to test this blue line, which is the 300-day simple moving average, currently at 90.24. Okay, to the downside, if there is a close below the EMA4, that's going to be a signal that's cooling down, and then you want to see EMA8 hold. That's currently over here at 81.98 or 93. If those levels did break, you could see a drop down to the gold line, which is the 100-day simple moving average at 7,600. As long as that level's holding, the uptrend, is still strong and intact. You don't want to see it dropping below the 100-day simple moving average. That would be a definite sell signal. The 100's holding and it gets above that 200, that's going to signal more upside potential. Okay, let's look at the Dow Jones Industrial Average. Yeah, so it was these annotations are old here. This is a previous chart that we had been working on. So as you can see here, it broke above resistance last week. Okay, so this was the high close resistance level. You can see there was tops here around this 2,500 level or 25,000 level just above. And then on, what was it, Wednesday of last week, this white candle right here busted above that level, and then it was pushing higher, with earnings happening. But then on Friday there was a cool down. You notice a red candle formed on Friday. The gap filled on Friday. There was a space. You can see the space between high of day on this candle and low of day on this candle between Wednesday and Thursday. The red candle on Friday filled the gap, so that gap is filled. Now the big thing, it's all about EMA4 next week. If it can stay above 25,395, that's the current level right now, the pink line, that's going to signal that this uptrend is still strong and intact. If it breaks below, you can see it drop down to 25,274. As long as EMAs 4 and 8 are holding, this uptrend is still intact that started back here on the 9th of July. If it closed below EMA 8, that would be a bearish change in trend. So that on this last pullback here, the line held the EMA 8, and so if there were a close below, then you could possibly get this kind of move over here that happened in June. So we need to be on the lookout now for a potential pullback, and the clues are going to be EMA first breaking, and then EMA 8 support breaking. Those would be two clear signals that we're heading for possible consolidation, possible pullback to that 24,800 level. Now to the upside, what has to happen, it needs to break above the closing price on Thursday of last week. If it can break above that level, then you have the high, I don't think it's the high close, but this closing price back in February. It looks like February the 26th is going to be the big level to break, and that's right about 25,700. And so yeah, so we'll keep an eye on the Dow Jones Industrial Average. Okay, so this is the short Dow 30. This is ticker symbol SDOW, and so if the Dow Jones Industrial Average is going down, then this would go up. And so on Friday there was a bounce. You can see here that there's a very strong downtrend for SDOW right now. It's all about breaking EMA4 at 1635. As long as the candles are forming below EMA4, the bears are still strong, and in this case the bulls, the Dow Jones bulls are still strong, and so this bear ETF would still continue heading lower. Now if it gets above EMA4, then it's going to be all about breaking EMA8 here. You can see, 2 weeks ago it hit that EMA level and pulled back, and so we'll be watching SDOW this week to see if it heats up, if the market does cool down. The inverse of that is UDOW, UDOW. It has the same chart as the Dow Jones Industrial Average, pretty much, and so it's very bullish right now. And it just took a little breather on Friday, and it filled the gap. Okay, let's look at SPX here. This is the S&P 500. So it had a 2-day pullback there heading into Friday. So yeah, not what you would expect to see when big companies like Netflix and Facebook were reporting earnings. There were a lot of shocks and surprises last week. A lot of people getting burned trading options. I mean, a lot of the big FANG stocks were killing both calls and and puts. Both of them were down for a lot of these ticker symbols throughout the week. And so, the gap up opens followed by pullbacks, that kills the calls. And then, the gap up open kills the puts. It's just it can be a tough game. Right now, you've got the red candle that formed on Friday, and you can see it's bouncing off of EMA 13 at 2808. That's going to be the big level to hold this week. You want to see the S&P 500 stay above 2800. If it dropped below 2800, you could see a potential pullback to that middle Bollinger Band. And so that middle Bollinger Band down there at 2788, that needs to hold to keep this uptrend going. If that were to break, then a new downtrend could possibly begin. There is a gap here on the chart. So you've got a little gap between high of day on this candle and low of day on the 9th. And so a drop down to that 50-day simple moving average at 2761 would fill the gap. Okay, so there was a lot of talk this last week. I think it was 2820 was the big level that a lot of technicians were looking for the S&P 500 to stay above. And, they were looking for a break above that level to signal that it wanted to head higher. And, it broke out temporarily above that level, but it pulled back below. And so keep an eye on that 2820 level for S&P 500. If it's trading below that level, that's going to signal downside risk. If it's trading above 2820, that signals that it could head higher. Okay, let's look at SPXS. This is the S&P 500 bear 3 times, and so this is going to move the 3 times the movement of the S&P 500, the inverse. So with the S&P 500 being down, this was up, okay? And so you had the S&P 500 down 66, and so this was up 3 times that at 193. And so when the S&P 500 goes down, SPXS is supposed to go up. And then on Friday, it's trying to heat up here. It's hitting EMA 8 right now. They pulled it back below. They haven't allowed it to close above EMA 8 since this pullback, okay? So there was a close above EMA 8 right here on this white candle, and then ever since this candle right here, every single close has been below the lime line. Once you see a close above that level at 2375, that would be a bullish change in trend for SPXS, and then it could head higher, and then it's going to be all about $24. Trading above 24 would be really bullish. That's EMA 13. Once it gets above EMA 13, that's usually when they get moving, like back over here. It did run up over here when it got above EMA 13, hit the 100-day simple moving average. You could see here if it got the last couple of times, it's been able to work its way back up to that 100-day simple moving average, and that's way up at 2678. Even a move back up to that 50-day simple moving average at 25 would be a big move from down here at 23. So I would keep an eye on SPXS XS if the S&P 500 keeps having problems. It was just a pause this last week. Is this a pause in the uptrend, or is it going to be a correction? There's also SPXL, and that's the bull 3 times for S&P 500, and that has the same pattern is SPX. And so, if you think the market is going to correct and bounce, then SPXL is going to be the way for you to go. Let's look at NASDAQ here. So NASDAQ had a really ugly candle. I think this is a big warning. I should have... maybe I'll just throw that in there. I should have put the Russell 2000 as well. It was all about the NASDAQ and the Russell 2000 breaking down. In my mind, that is showing a sort of showing a shift in the market. And the sector leaders or the market leaders are under the most pressure right now. And so if you look at NASDAQ, it was down 1.4%. That's much more than the S&P 500 down 0.6 and the Dow Jones Industrial Average down only 0.3. So you can see the Dow did the best, the S&P 500 did twice as worse, but then look at the NASDAQ compared to the Dow. So there's a sector rotation right now out of the high flyers, those all-time high tech stocks, and into more defensive plays. And so yeah, you want to start looking into other sectors, you know, and thinking about rotation for you know, at least in the short term here, while the technology sector is under pressure. You could see here with the NASDAQ, this is a really bearish move. If it gets below 50 on RSI, it's at 51 right now, that's going to be a big signal that it's really cooling down. You've got SDOW down here at 26, so it's not oversold. It's not below 20 yet, but it's heading that direction. There is a bearish crossover on the NDX. You can see how the red line, minus DI, crossed plus DI to the upside. That's a signal the bears are heating up. That's the inverse of this. This is good if you're a bull, with the green line crossing over the red line. That's what we call the bull cross on NDX. And you notice how when that happened, you know, that all lined up with this nice uptrend. And so right now we have the inverse of that. This is the first day of that right here. So is this going to be the start of this kind of move? You know, is it going to be a prolonged downtrend similar to this prolonged uptrend? Well, that crossover is not a good sign. It could be a one-day event like this right here. You know, it could cross back over the green line. But if the red line stays above the green and the black line, that's going to be a signal that the bears are in control. All right. And so we also have a PSAR bear flip. Notice the green dots here. They were below the candles. PSAR, SAR stands for stop and reverse. Parabolic SAR, stop and reverse. And so when the dots are below the candles, that's when the stock's heading higher and it's in an uptrend. And then when it flips over the top, that's a signal to stop and reverse. That the uptrend could be stopping, and that it could, the share price could be reversing, and a new downtrend could be beginning. Okay, and so like if you have the dots above the candles, like over here in May, and then they flip below, that's a bull cross. And so you want that. And so right now with the candles, with the dots just flipping above the candles on Friday, you know, that's a signal that this could be the start of a change in trend. So it's going to be really important that this middle Bollinger Band, which is also the 20-day simple moving average, currently at 7292, holds. It has to hold this purple line. If you see a close below it, that's going to be similar to back here. And you can see it took a couple weeks for this thing to work its way out last time the NASDAQ got below that middle Bollinger Band. So it's going to be really important that it holds. You know, you can look back here for another example in May. It closed just below and it held that level and it kept cruising higher. And so it's going to, you know, it closed right on what we call the 50-yard line. And we call it the 50-yard line because the middle Bollinger Band is the middle of the channel. The upper Bollinger Band is the top. The lower Bollinger Band is the bottom. And then you have the middle Bollinger Band. So it closed right in the middle of the playing field. And so below the middle Bollinger Band is downside risk, signals possible downtrend, bears in control. Above the dotted purple line signals upside potential, bulls in control. So the 7292 is either going to be a reload level, because you're always looking to reload off the middle Bollinger Band if support holds, because it's the bottom of the bullish upper Bollinger Band channel. But if it closes below the middle Bollinger Band, that's going to be a sell signal. So you have to, it's that fine line between getting a low entry point and then getting a bad entry point and having the share price pull lower, or for this example, the index. And so it's going to be all about holding this level. If it drops below, you know, that's going to signal bears, you know, more puts, bad news for the NASDAQ. If it bounces here, this is where, you know, you could see some a nice rebound, because this is the bottom of the channel, you know, similar to over here when it got to the bottom in May. So this is just, we're going to have to see how this plays out. If it breaks below 7292, then you're looking at a potential drop down to the 50-day simple moving average. That's exactly what it did back here in June. It came down, hit the green line, bounced off. And so if that dotted purple line breaks and turns into resistance, then the green line becomes the target, and that would become the reload zone if, you know, with apostrophe, you know, like, you know, print, you know, the if, big if, capital letters, if support holds. You know, it's always that fine line. You're going to get the good entry point if it pulls down there, hits that level, and then you reload, and then it bounces off. But you also have to use that level if you reload off of it as your stop loss as well. And if it breaks below, then you have to exit quickly and not hold, because that signals downside risk. So there's always a fine line when you're trying to get the low entry point. You can see down here, people that loaded off the 50-day simple moving average last time were highly rewarded, right? Because that was the very bottom. But you know, if you tried to load off the middle Bollinger Band, it jumped below it last time. You know, you were not rewarded. You were rewarded back here in May if you loaded off the middle Bollinger Band. That was the bottom, and it headed much higher. And so yeah, so we'll see how this plays out. I'm just trying to help people out, giving them some ideas. This is all just my own personal opinion. You know, it's just a strategy that I think works well. Let's look at SQQQ. This is the short triple Q, and so the triple Q is the NASDAQ stocks here and the technology sector. And so if the NASDAQ is going down, then SQQQ should be going up. And so it did close up 4% on Friday. It made a nice bounce. Notice the PSAR bull flip. The dots were above the candles, and then they flipped below. So that signals a possible start of a new uptrend. It's going to be all about breaking that middle Bollinger Band at 12.96. And so if it can close above that level and turn it into support, a new uptrend could begin. What you're looking for, if it breaks above 13 there, is a run up to the 50-day simple moving average at 13.71. That would be the next big level to break. You can see it's failed to really get moving. It's gotten above the middle Bollinger Band and then stalled out at the 50-day simple moving average, and it's continued lower. And so it's been, you know, as the technology sector heads higher, the SQQQ has been in a very strong downtrend. Well, now we're looking out for a possible start of a new uptrend if it can get above 13 this week, so watch that level. Keep an eye on volatility. It's been heating up. This is VXX. This is the VIX short-term futures ETN. It bounced on Friday. We were talking about PSAR bull flips. The dots were above the candles, pulled back. Friday there was a bull flip. The last time there was a bull flip, you could see here, bull flip down here at the bottom. It did run much higher. There was a bull flip. You had the dots were above. They flipped below. You know, if you loaded at the bottom, it did run all the way up here to 39 from down here at 34. And then here when it flipped, you know, it flipped on this day here. You know, if you loaded at 33, it did run all the way up to 40. And so now here you go again. You have the PSAR down here. It flipped. Is history gonna repeat? And it may not happen on tomorrow, but in the next couple days, are we gonna get a VIX rally? And if we do, and PSAR repeats the signal again, you know, this is going to be the entry zone. Okay, so look for a break above 3150 for VXX. If it gets above 3150, that should be our clue that it's ready to go. And then notice how there hasn't been a close above that level since back here on this white candle when the downtrend really got going. And so that's going to be a bullish change in trend. There was a close above EMAs 4 and 8 on Friday. And so notice how all these candles were below the lime line, except for this white candle right here on the second trading day of July. So allowing it to close above EMA 8 was a bullish change in trend. They did pull it back and not let it get above EMA 13, so that's going to be the big level to break. And then it's 3250 resistance zone, that middle Bollinger Band. That'll be the big level to get above once it gets above EMA 13. If you're a bull, you're looking for this type of development, you know, this move, you know, above that middle Bollinger Band, above the orange line, and then that's going to signal that VIX is moving again. Notice that there was a volume spike. Okay, so there was the volume behind the move. Notice, let's see here, if we look at the other, you know, there wasn't a big spike there. On that PSAR bull flip, you know, it did have volume spiking here before this, you know, on this flip, there was a similar type of volume spike above. Notice how this was the largest volume day for the month of July. You had to go back to June to see this type of volume, and that was the similar thing here with this other PSAR bull flip. Notice how it was like no volume, well, not no volume, but the you know, the volume was lighter, and then you had the spike on the PSAR bull flip day. Same thing here. So that's our clue that the bigger players are loading, and so you know, we like to follow the volume, and so there's volume and it's heating up. But the bottom line is, if it goes back below EMA 4 at 30.94, that's going to be a red flag. It's going to make it a risk to hold, and it's going to signal it's not ready to go. It has to stay above EMAs 4 and 8 now that it's trading above. Okay, let's look at UVXY. This is the short-term futures ETF for VIX, and yeah, it closed up 4%. This is making a nice move as well. Very similar pattern. You know, you've got the PSAR bull flip. You've got the move above EMAs 4 and 8. Now on this chart, it's all about breaking EMA 13 at 965. If you can get above 965, then it's that middle Bollinger Band at 1016 is going to be the key level. You know, this does have a gap on the chart. You've got the gap up here. You know, so a run up to this, you know, up to $11 would fill the gap. You know, what you'd be looking for here, if it gets above EMA 13, is for a run up to that 50-day simple moving average at 1074. That's what it tends to do when it gets moving above EMA 13, similar to back up here. You know, when it made the nice run last time. So yeah, so we're going to keep an eye on UVXY and then take a look at TVIX now. Yeah, it's all the way up. You know, it's $37 a share, so it's like kind of you know, when it was trading at much lower levels, you know, the penny stock traders were all about it, and so now it's a little different at $37 a share. You know, it's really just psychological. You know, it doesn't matter if it's $2 or $30. It's just more about the chart. You know, maybe you're going to be able to buy 10 shares, or you can only buy, you know, or you're going to buy 100 shares. It doesn't really matter. It's just all about, you know, is this chart turning bullish, and is it going to head up? Right now, you know, for the bull traders, right now it's all about getting above EMA 13 at 38.34. Okay, so if you can get above that level, then the middle Bollinger Band at 41 will be the next target. You've got the gap over here as well, and so a run up to the 50-day simple moving average at 44.78 would fill the gap. You know, it closed above EMA's 4 and 8. There was a PSAR bull flip. You know, it had the volume spike. You know, everything's signaling that it's heating up. You know, it was the largest volume day in July. It just has to follow through. VIX is, you know, hasn't been following through, and so yeah, we'll see if it can get above resistance this next week, or if it does. And then you've got the pinched MACD. If that MACD line crosses over the signal line like it did on the 8, 13, and 5, that's a signal of a possible new push higher. Notice that the other runs, the big last 2 runs that happened, notice how the black line crossed over that blue-purple line right there. So notice how that they crossed over, and then the run followed. You know, it got pinched here and, you know, barely got over, but notice that crossover as well was the start of this run. And so now you have a similar type of setup. You know, if it crosses over, you know, is this going to be the start of the next run? Okay, so take a look at XLF. This is the Financial Select Spider, and so this is the banks. You know, this is the you know, it's been on a good uptrend. The banks have been, I would call it a sideways channel. You know, it's kind of a big sideways channel here, but you know, it's been trading down here between 26.50 or so, you know, down here at the bottom of the chart, you know, 26.40, you know, down at the bottom, and then up here at the top's around $28. You know, you've got the top here since this gap down, and so right now it's hitting that key 2820 resistance zone. That's from back here in May. If it can get above this 2820 level, there's a gap over here from back in March, and so between low of day on this candle and high of day on this candle, and so a run up to about 2850 would fill that gap. And so that would be the next target, would be a break above 2820 and then a possible gap fill. The candles have been riding EMA's 4 and 8 support higher. The financials are in a very strong uptrend right now. This is a good looking chart. It's actually, you know, the candles are above all the moving averages, riding EMA 4 at 28 support higher. As long as that 28 level is holding, that's going to be signaling the chart super strong. If you see it close below 28, that's where it could possibly consolidate, and then you'd want this 100 and 200-day simple moving averages at 2760 holding. Now a break above the top of this gap here, this 2850 level, then you're looking for a potential run up here to this March high close, which is right around 2950. Okay, so take a look at the energy sector here. We've got the XLE Energy Select Spider. Now, it's been in a sideways channel as well for the last couple of months. And right now, it's kind of pushing the top of the channel. It's going to be all about breaking this July 10th closing price, just below 77.50. If it can get above that level, then it's up here on this May 21st closing price, just below 78.50, 77.50, 78.50. Those are going to be the 2 levels above that are going to be tough to break. You know, if it can bust through, that's going to be a big signal that the energy sector is ready to head higher. To the downside, if it did drop below this middle Bollinger Band and 50-day simple moving average at 77 or 75.70, that's going to signal more consolidation. You want it to see it staying above 75.50 now, and then breaking above resistance. I mean, it's a pretty tight channel here. between this 74 zone and 77, 77.50 zone, and so right now, being at 76, it's more of the top of the current zone. We'll see what happens. It could just go sideways here. It's not a real sexy chart the last couple months. You can see here it needs to either break out above resistance or below support to really get any kind of good trades going. You can trade in the if you're trading the channel, then you load the bottom and sell the top, and if you're a bull. Let's look at LABU. Okay, so this is the biotech bull 3 times, and so it's been under big pressure. Look at that big drop on Friday. So it's back down here. It's testing this key support level from June, and so it's going to be really important that it holds support here, this 90 level. A break below 90, and then right now it's bouncing off the 100-day simple moving average at 92.51. That's the gold line. It needs to hold this zone here. If it were to break below, then you have the 200-day simple moving average at 87.56. That level was tested back in June. Once there was a close here below the middle Bollinger Band, that's the dotted purple line here on the 24th, that signaled downside risk. That was your best first loss if you were in here and then it dropped below, because you could see what happens if you held. It's only dropped lower. And so whenever they break that middle Bollinger Band, you can see right here, look, it really got going lower. So you have to be very careful. Same thing over here back in April into May. Each time if you exited, if you were in on that break below the middle Bollinger Band, you were glad you did. It dropped much lower. It provided better entry points lower, and then prevented from downside risk. Each time it did get back up above that level and keep pushing higher, so keep that in mind. But right now, this is at risk of starting a new downtrend. It's going to need to bounce off this 90 to 92 level, or you could see 87.50 tested next week. To the upside, it's got to get back above that 50-day simple moving average, basically at 101. 101, and then it has to get above 105 here, that middle Bollinger Band. If it stays below the middle Bollinger Band, that's going to signal the start of a new downtrend. A new downtrend for the biotech sector means possible new uptrend here for the biotech bear 3 times. LABD, huge move on Friday, up nearly 9%. This chart's starting to cook here. We got the RSI at 61, FASTO at 83. You've got a big breakout here on plus DI. If ADX, the black line, crosses minus DI, the red line to the upside, that's going to be a big signal the bulls are taking control. The LABD is a bear ETF though, and so if the biotech sector is heading lower, this is heading higher. And on Friday, it had a really bullish close above that green line. That's the 50-day simple moving average at 24.88. That's the current line in the sand. If it can stay above that level, it signals more upside potential. If it dropped below, that would be a sell signal. It would signal it's consolidating. It could drop down to that middle Bollinger Band at 23.15. It's only good for a long trade if you're going long LABD. If it stays above that 50-day simple moving average, it's hitting that upper Bollinger Band right now at 25.79. If it can bust through that next week, you've got the high close here on the 27th, which will be a key level to break. You got to get above the high close, and then the next level is going to be up there at that 100-day simple moving average at 29.20. Whenever you get above that 50-day simple moving average, you're trying to get that run up to that 100-day simple moving average, but it has to break above high close resistance. In this case, it looks like at about 27.25 is going to be a key level to bust through next week. All right, so thanks for viewing this video. If you'd like to learn more about charts and technical analysis, please come check out the chat. Okay, thank you.